Good day. Today we will be presenting our research on risk assessment in commercial loans and its influence on marketing strategies, focusing on Metrobank's approach in Davao City. This study delves into how risk assessment tools impact marketing decisions, specifically for small and medium enterprises. Commercial loans are crucial for businesses to expand and sustain their operations, but lending comes with risks. Risk assessment helps financial institutions like Metrobank evaluate the likelihood of default and manage these risks. Interestingly, the relationship between the risk assessment and marketing strategies remains underexplored, which is what this research aims to address. For the background of the study, commercial loans help businesses with cash flow, investment, and expansion. Effective risk assessment is necessary to avoid defaults, balance risk and reward, and ensure the financial stability. With the rise of digital banking, especially in the Philippines, banks now use more data-driven tools to refine risk assessment and marketing strategies. While much research has been conducted on credit risk assessment, there is limited exploration on how this process influences marketing strategies, particularly for SMEs. This study aims to fill that gap by investigating how risk assessment shapes marketing decisions in the commercial banking sector. For the literature review, factors influencing borrower's credit risk profile, a borrower's credit profile includes various indicators such as their credit score, probability of default, and collateral. These factors help determine the risk level associated with lending, which in turn affects the loan's terms and the bank's marketing strategies. Influence of risk assessment on marketing strategies. Risk assessment influences how banks market their products. Higher risk borrowers might be offered loans with stricter terms and higher interest rates, while low risk borrowers receive more attractive offers. Understanding this helps the banks target customers more effectively and create tailored marketing strategies. For the theoretical framework, this research is grounded in credit risk theory, particularly the Merton's work and the Z-score model. The theory emphasizes how credit risk profiles influence the loan decisions and marketing strategies. By assessing the risk of a borrower, banks can determine how to price loans and whom to target with specific offers. For our conceptual framework ties together the borrower's credit risk profile, including the credit score and the collateral, with the risk analysis process. This results in strategic marketing decisions like targeting specific borrower segments and adjusting loan terms and pricing accordingly. So our independent variables are credit score, probability of default, and loan collateral, while our dependent variable is the loan marketing strategies.
So, hi everyone. To continue the discussion, I will be diving into the intersection of risk assessment and marketing strategies in the context of commercial loans. So, our research focuses specifically on loans offered to small and medium enterprises or SMEs. So, let's dive into the purpose, the objectives, and the hypothesis that frame our study. So, first, let us go to the research purpose. So, this research is very straightforward and critical. We aim to explore how risk assessment factors influence the development of marketing strategies for commercial loans. Specifically, we want to examine how three key risk indicators, credit scores, probability of default, and loan collateral, shape the strategies banks use to market their products to SMEs. So, this is a crucial area of study because understanding these dynamics can enhance both lending practices and SME growth. Now, for our research objectives, we have outlined four specific ones. So, first is to analyze the influence of risk assessment factors on marketing strategies for SMEs, specifically credit scores, probability of default, and loan collateral. So, this specific objective investigates the impact of the three indicators on how banks design and implement marketing campaigns for commercial loans targeting SMEs. The second objective is to explore interrelationships between these risk assessment factors and how they collectively shape marketing strategies targeted at SMEs. So, by identifying the interactions among the three risk factors, we can better understand how banks optimize their marketing approaches to balance risk and profitability. For the third objective, to identify key marketing strategies employed by banks based on these risk factors, this focuses on specific approaches banks take, such as promotions, pricing strategies, and communication of loan terms. And for the last objective, to examine the effect of risk assessment on customer perception by SME borrowers on loan offers. So, understanding the SME borrower's perspective helps align marketing and risk strategies with their expectations and needs, fostering trust and engagement. So, each of these objectives provide a critical lens through which we can understand and improve the alignment between risk assessment and marketing in the banking sector. So now let's proceed to the hypothesis. So our research is grounded in six hypotheses that address various dimensions of this topic. So I will be discussing them to you in detail. So first is the hypothesis on credit score. So H1, higher credit scores of SMEs positively influence the marketing strategies employed by banks, leading to more favorable loan offers and terms. This hypothesis stems from the principle that credit scores are indicative of financial reliability. We posit that banks use higher credit scores as a benchmark for offering attractive loan conditions, emphasizing favorable interest rates and flexible repayment options in their marketing strategies. Hypothesis on probability of default, or H2, a higher probability of default among SMEs negatively impacts the marketing strategies used by banks, resulting in more conservative and risk averse promotional approaches. So, this reflects how perceived risk translates into marketing caution, with banks potentially offering higher interest rates, stricter terms, or limited promotional efforts for higher risk SME segments. Then, the hypothesis on loan collaterals, or H3, the presence of collateral significantly influences the marketing strategies for commercial loans, with collateralized loans being marketed more aggressively than unsecured loans. So, this hypothesis is rooted in the notion that collateral mitigates risk, allowing banks to market secure loans more actively and competitively to attract borrowers. And to tie them all up, the three factors, the hypothesis on interrelationships between risk assessment factors. So, H4, there are significant interrelationships between credit scores, probability of default, and loan collateral that collectively shape the marketing strategies used for SMEs by banks. So, understanding these interrelationships is crucial to comprehending how banks combine multiple risk factors to design holistic marketing strategies. So, for instance, a high credit score coupled with collateral might result in more aggressive campaigns compared to scenarios with conflicting risk indicators. Now we move to the hypothesis on key marketing strategies. So, H5, financial institutions employ distinct marketing strategies for SMEs based on risk assessment factors, with specific strategies tailored to varying credit scores, default probabilities, and collateral availability. So, this hypothesis highlights the segmentation driven marketing approaches where loan offers are customized to match the risk return profiles of different SME borrower groups. And the last hypothesis is the hypothesis on customer perception. So, H6, risk assessment factors, including credit score and collateral, significantly affect customer perceptions of loan offers among SME borrowers, influencing their acceptance or rejection of such offers. So, this hypothesis emphasizes that the borrower's perspective, suggesting that risk related factors play a pivotal role in shaping how loan products are perceived and adapted by SMEs. So, in conclusion, this study seeks to bridge the gap between risk assessment practices and marketing strategies, offering actionable insights for banks and financial institutions targeting SMEs. So, by exploring these hypotheses, we aim to pave the way for more effective and equitable lending practices. So, that is it for our research objectives and hypothesis. Passing the baton to Carl for the methodology. Thank you.
To continue the presentation, my name is KARL TANJILI and I'll be discussing the research design for our study. So the research will follow a causal explanatory design, which is particularly useful for examining how independent variables influence the dependent variable. So the main goal is to understand how the bank's risk assessment influence its marketing decisions, especially in the commercial banking sector, where these strategic decisions are often based on comprehensive risk analysis. So now let's go to the sample size and the sampling method. So for the sample size, the study will involve a sample of 30 participants, specifically loan officers and credit officers from Metrobank. So this sample size has been chosen because the focus because of the focused nature of the study, as it involves professionals directly engaged in both risk management and marketing strategy development. So the relatively small but specialized groups of 30 professionals ensures that the research remains manageable and that the data collection is feasible. Now for the sampling method, to select the right participants, the study will use purposive sampling, which is a non-probability sampling method. So this means we will specifically choose individuals who are directly involved in commercial lending and have relevant expertise in both risk assessment and marketing decisions. So by using the purposive sampling, we ensure that we gather insights from professionals with the appropriate experience and decision-making authority. So this targeted approach will provide valuable insights into the research questions. Now for the data collection procedure. So this study will utilize a mixed methods approach, combining both surveys and structured interviews to collect data from relevant stakeholders, including professionals at the bank and representatives from SMEs. So for the surveys, a structured questionnaire will be created to gather data from the participants, focusing on key areas such as first, we have the bank's use of risk assessment tools. How does Metrobank use credit score, profitability of default models, and collateral to shape their loan marketing strategies? We also have marketing strategies for different SME segments. How are marketing strategies tailored to different segments of SMEs based on their risk profiles? So the questionnaires will include a combination of closed-ended questions, which allow for quantitative analysis, and open-ended questions, which will provide more qualitative insights from the participants. And now for the interviews. So to enrich the survey findings, we will also conduct optional structured interviews with loan officers and credit officers. So these interviews will delve deeper into the decision-making processes behind the marketing strategies and loan offers tailored to SMEs, with a focus on first, understanding the rationale behind specific marketing approaches based on risk assessments. Second is exploring how the bank adjusts its loan offerings to cater to different SME segments while considering associated risks. For the data analysis, once the data is collected, it will be analyzed using multiple regression analysis. So this statistical method will help determine the strength and direction of the relationships between the independent variables, which have been already discussed earlier, which are credit score, probability of default, and loan collateral, and the dependent variable, which again is the marketing strategies. So multiple regression analysis is ideal for this study because it allows to examine how several independent variables simultaneously affect a single dependent variable, enabling us to test the proposed hypothesis. For the scope and limitations, this research is specifically focused on Metrobank and will involve a small sample size of loan officers and credit officers. Due to the narrow scope, the findings may not be easily generalized to other banks or broader populations. However, to increase the external validity of the research, future studies could expand the sample size and include multiple banks, providing a broader perspective on how risk assessment factors influence marketing strategies across different contexts. For the ethical considerations, throughout the research process, the study will adhere to ethical standards. Participants will be fully informed about the purpose of the study, and their informed consent will be obtained before any data is collected. To protect their privacy, all participants' identities will remain anonymous, and the data will be used exclusively for academic purposes. So, by maintaining ethical integrity, we aim to foster trust and encourage participation from all stakeholders involved in the study. So, in conclusion, this study, again titled Risk Assessment in Commercial Loans and Its Influence on Marketing for SMEs, the case of Metrobank in Davao City, aims to provide an in depth understanding of how risk assessment factors influence the marketing strategies for commercial loans targeted at SMEs, specifically within Metrobank. So, through a combination of surveys and interviews, we hope to gain valuable insights into how banks adjust their marketing efforts based on risk evaluations. The findings from this research will contribute to enhancing marketing approaches and risk management strategies in the commercial lending sector. benefiting academic research and the banking industry here in Davao City. Again, thank you.